Let me know when you're good.
All right, good to go.
Cool. Why are my drawings not showing up? Hang on. Okay. Hey guys, welcome. Today is, what's today? April 2nd. And that is very strange. A lot of my drawings went away. Let me try to refresh this. So, hey guys, we finally have some action after several months of consolidation. And anytime there's kind of a big move or whenever we hit an inflection point in the markets, we want to do an update. So basically, beginning of the year, we went to weekly updates where we do a little bit of a longer class and we go kind of deeper and broader. And then, what we told you guys is, hey, when we go back into a bull season or when there's more action, we'll either do impromptu classes or add more classes. That way we, can save as much of your time as possible and you get the biggest value for the time that you're actually in a class, right? We don't want to just repeat the same thing over and over again if there's no change to the plans, right? So, yeah, looks like let's just do one more quick mic check. Can you guys hear me? And then Rock, do you want to do a mic check?
Mic check. Mic
Cool.
check.
All right. Looks like we're good. Okay, just wanted to make sure. So anyway, guys, let's just kind of jump into it. And the first thing that I like to do anytime there's a big move in any market is just reevaluate the possibilities, probabilities, and plan, right? This is kind of anytime that you come back to the markets, I don't care if you were looking at them 10 minutes ago or 10 months ago, if you approach it with this mindset, it's going to help you see both sides of the market, meaning the bull case, the bear case, and the choppy case, right? And it's going to help you focus in and see what's important and really read the market through the noise and get the most important information. So with that said, let's just kind of run through. So talking about possibilities as we saw them over the past couple of months, we had the chart written out that you guys can see in the trade alerts and the watch list section. Possibilities are breakout above the 4K resistance, right? Or wash out into the 2K zone, right? And we know that we were basically consolidating since February, right? We've been basically making just tighter and tighter patterns. And when that happens, and as we've been saying the past few weeks, is the tighter a consolidation pattern gets, typically the bigger the move when you have a breakout. So another good example of that is coming back into 2016 when we had, these were basically 6-month patterns. So for those of you guys that were trading with us back here, you know how equally, if not more boring these patterns were than what we just went through. But Bitcoin needs to do this. It's healthy for markets to actually have these accumulation patterns, right? Because that's what gives continuation. That's what gives follow through. So as you can see here, after we came out of accumulation in late 15, going into 16, we had 6 months of consolidation. And then that gave way to a 65 to 70% pop, which immediately put us back into another 6-month or so consolidation, which again led to another 50% pop, and then ultimately led to phase 2 and 3, right? So whenever we look at the market right here, you can see really the consolidation pattern started back in November or December, where we kind of had an inverse head and shoulders. We couldn't catch a bid and the volume just kept fading off. And then today, if we go down to an hourly chart, you can see this pattern happen, or this breakout happen very, very quickly. Okay, so there's really 2 ways to play these moves. Is you do what I've been talking about, which is you have limit orders waiting, and or, so you can do both or one or the other. You can manually enter once alerts go off. Now, this is an example, at least for me in my time zone. I was sleeping when this went off, and it was it was so fast that even if I was awake, I probably wouldn't have been able to log in time and manually get an entry. And so I got some fills. It was actually only about somewhere around a quarter of the block orders that I actually had. And it was, I had some stacked basically right above that breakout level that we've been talking about. And so the risk in that, let's talk about the risk and reward of limit orders. And I'm not a huge fan of doing that. And the only time that I'll really do it is on really liquid markets like Bitcoin or Ethereum, and especially on an exchange that I quote unquote trust or that I have a lot of experience with. But, again, just kind of going back, the resistance area was here in the low 4K range. So got fills as low as like 4,200 all the way up to 4,400. But again, you can see why this happened when it did, just based on the chart. The tighter the squeeze gets, the bigger the move and the more explosive the move when it happens. Okay. So that's the possibility that played out. And now what we need to look at is kind of the next step. Okay. Now that we've had this pop, what does that mean for the next 24 hours to 1 year? Right. And what could this be the start of, or could it be a false signal? But before we go any further, I just want to make sure you guys are all clear on that. I mean, we've been talking about the possibilities and probabilities and our plans for both sides of the market. Is everybody clear on why the breakout occurred, where the entry was? And we'll talk about risk management here in a second, but just throw a quick why in the chat room if you're up to date and you understand what has played out so far. Awesome. All right. So with that said, let's talk about next steps. What are the possibilities and the probabilities right now? So there's really, in my opinion, I see three potential outcomes after this pop. Okay. Number one is, because we are still technically, meaning longer term price structure, in a bear market, this could be a pop and flop, right? Where basically we get a pop, we get a little bit of follow through into prior resistance, and bag holders from anywhere from 20K all the way down to 6K sell into this. And then we get what that would look like on the chart would be a V top to break below 4K. Okay. So it would basically, the bear case for this right now is, say we get a little bit of follow through, or maybe not, somewhere into this range. Right. And then what happens is we start to see, just like we saw a volume spike right here, we start to see really heavy selling. And then over the course of like 1 to 3 days, we just get massive selling, right? On high volume. Okay. So I'll add that here. High volume selling from bag holders, right? Possibility number two is we get a shift in long-term market direction, right? Which would look something, if it developed from here, this would be similar to the first bubble pattern in 2013. And what that would look like on the chart is a 6K retest followed by consolidation with a breakout above 6K. Okay. So So I'll just make this red. So this will be our bear case. Something to this effect. The longer term bull case would be something similar to where we get a push into 6K. And then we basically get consolidation. So instead of that V top with heavy selling, let's say we chop around and we basically flatline around this prior market structure zone, around the 6K zone, right? So we flatline and we start to creep up. And here's the key difference here, guys, with number 2 is we'll probably see something like this where you actually get a higher low, right? And then that would be more confirmation, not a guarantee, but it would be more confirmation that the long-term price structure is changing. Because right now, again, I mean, this is our first pop and this could hold, but because we have this first possibility of a pop and flop, we don't want to get overly excited and just say, oh, okay, we're back into a long-term bull market right away. But if we do something like that where we get the follow through and then there's, a little bit of a battle through 6K and then it holds up and then it breaks up above 6K, that, in my opinion, would be confirmation of a shift in market direction. And if we look at Bitstamp, which has the most price data that I can pull up here, if we look at that as the first bubble of 2013, here's what happened. So price went from about, 10, 20 bucks up to the 250 area, had the phase 3 parabolic, phase 4 crash, phase 5, and then we would kind of be somewhere now, like right around here compared to where we are in today's market. So again, extended bear market, but this was much, much shorter as we've seen now, because as Bitcoin grows and the market cycles become larger, the time that it takes for the price patterns to play out takes more time, right? So this is what happened here. So you can see if I zoom in a little bit, we had, excuse me, we had the sell-off and then we had capitulation and we had this like inverse head and shoulders pattern where $100 was pretty strong resistance through here, right? And so this is kind of how I'm looking at this today. It's like, okay, we have a sign of a shift, but there's a lot of resistance through here, right? So you can see price got back up into major daily resistance, and then there was a battle for a while, and there was even this stop clearing price action. And this is something that we've seen in Bitcoin. This happens pretty frequently prior to big breakouts, because the markets like to make the biggest moves with the least amount of people in them. That's just what I've observed over the past 15 years of being in financial markets is you'll get this stop clearing. We saw in 2015, right, in accumulation, with flash crashes and stop clearing by exchanges. We saw it here in 2013. We saw it a couple of times in 2016, and when Bitfinex got hacked. So this happens all the time. And then what happened is we started to creep up into it. And then you could see we have a break of this resistance line, which ultimately led to a much bigger price move, right? So, okay, do you guys see that? So again, kind of get this image in your head. I'll take a picture of this and I will post it in market chat. I'm going to post this in crypto market chat in Discord. So if you guys... I'm going to title this example number 1 from class. So if you guys want to keep that for reference, that's kind of like what a fast shift in market direction would look like, right? So if I, again, just kind of fast forward to today's price action, let's go back to Bitfinex just for continuity. That's kind of what this would look like is something. And Bill, I saw that you posted a chart that would be the extreme bull case. And then so Again, it would look like, capitulation, reversal pattern, right? This could turn into like a big inverse head and shoulders or a cup and handle, some kind of a reversal price action where we get that higher low. And then, we have consolidation through the 6K range and then the break. And then that is confirmation of a shift in market direction, right? Does that make sense? Do you guys see the similarity there and how that scenario would look if that played out? Cool. And then that's example number 2. So I just posted that in Discord. So possibility number 3 would be something more like a 2015 where and in my opinion, I'm guessing here because again, we can't predict the future. We can just respond to price action, but I believe that this is maybe the highest probability, and I'm thinking through this. I'm still kind of developing my thesis around this, but this is kind of what I am guessing is going to happen. Again, we're going to have a plan for each one of these scenarios, but this is kind of my guess. All right. I think number 3 probably has the highest probability, which is basically a longer term accumulation pattern. So not a pop and flop, and also not an immediate reversal to a phase 2, right? To a phase 2 type price action, like immediate bull trend. Immediate bull trend. Okay. And then, so what that would look like on the chart is a retest of 3K to 4K. Doesn't break 6K, doesn't break 6K for a few months at least, right? Then eventually goes back into phase 2. Okay. So what that would look like, and I'll color this one yellow since this is kind of the medium case, is like we get the pop and then we pull back to retest this zone. And I'll color this one yellow since it's kind of the medium case. And then we basically do like a 2015 type price action where it takes even longer. Yeah, Bill, like a higher consolidation type phase where we get, so this is where it would become interesting is we see more confirmation, if I can spell, that 3 to 4K is accumulation, right? Phase 1. And then there's some kind of, usually these things are brought on by like a fundamental event, like a black swan. Like the craziest thing, what kicked off the bull market in 2016, the end of 2015? Who can remember what actually took price from 250 to 500? That first time right before 2016. Who remembers? No, not Bitfinex. The thing that actually started the bull market, that gave that big run in November 2015. It's ridiculous. It's stupid that this is what happened, but it's just a good example that this is like how crazy quote unquote fundamental events can affect Bitcoin. Yes.
I just gotta say, yeah, MMM. I just gotta say, Travis is like parabolic Trav's tweets.
Yeah, parabolic Trav, Malcox. Yeah, Rocky getting the low tech. No, it was a Ponzi scheme, guys. It was a Ponzi scheme in Africa called MMM Ponzi, or what was it? I don't even remember the name, but that's what kicked off the freaking bull market of 2016. So my point is you never know. You never know. It could be some kind of announcement by a government. It could be something as ridiculous as a Ponzi scheme. It could be anything. You never know. But that's what I mean is like it's hard to put a timeline on this. However, what's coming up next year that would kind of correlate if the price action does something similar to 2016, what do we also have in 2020?
Bitcoin halving.
Yep.
But Chris, this breakout was all caused by an April Fool's joke yesterday, according to Bloomberg and Business Insider. People believed that this breakout was due to an April Fool's joke on an ETF approval. And apparently,
wow, that's funny.
People who trade, according to them, people who actually trade enough size to push the Bitcoin market like that are so dumb that they'll just blindly market buy on an April Fool's joke.
Oh man, yeah, that's hilarious.
That's stretching. Talk about grasping for straws.
You know, there's some billionaire sitting there going, "Oh crap, the SEC did it. Okay, market order, $10 million, $20 million."
Yeah, buy, FOMO.
Yeah. So again, this would look similar to 2015, right? So basically, so I'm gonna just name these potentials. Number one is pop and flop, right? Number two, what do we call this? We'll call this one fast shift into bull trend, right? Number three is confirmed accumulation. Okay. That's in a nutshell what these patterns would be, right? So one is, hey, maybe Bloomberg and the mainstream media is right, and maybe there were a bunch of fools that bought yesterday based on some fake news, and then it pop and flops. Or, you know, the higher or the more likely reason that we would get a pop and flop is because we had this 6-month area of hope, right? Where, if you guys recall, through this zone, there was just a lot of hope that this area would hold up. And in trading and investing, hope is a 4-letter word, because if you're hoping something is going to happen, that means you're not looking at both sides of the market and that you're likely to get run over, right? So that's what happened. We got follow through to the downside. You know, we had a little bit of a reversal pattern, and then we got a squeeze, right? Which really, I can't even call this a short squeeze, because BTC shorts have been kind of testing yearly lows. And actually, yeah, they kind of bounced up. So there's more, looks like today some shorts actually piled in. Excuse me. But that's basically what I see as the potentials. Again, just to recap. So a pop and flop where we V-top, right? So we get somewhere in between, you know, call it 5,500 and 6K, and prior bag holders that had that hope mentality, meaning anybody that bought above 6K on the way up or during the 6-month hope pattern, right? Why do these things happen? Why do prior resistance areas hold? Well, it's because, you know, think about the people. Think about who's going to do what. I always think about who is positioned at what areas in the market. And anybody that bought up here that's looking at this level going, man, if I could just get to break even, or if I could just get to 6K, dear God, I promise I'll sell and I'll never do that again, right? That's what caused the dead cat in 2014, right? When we had this crash. So for anybody that was with us in 2014, you guys remember this one, where we had a secondary panic down into the 400s. We bought here in the low 5s, but we knew that prior resistance was up here in the 900s, right? This is where the bag holders were, right? That's why we closed up here in the 900 zone, right? So that's why, like, when you have these bouts and these kind of retest of prior resistance, if there are bag holders at that level, that becomes a self-fulfilling strong resistance zone. Okay. So that's why, like, I think the higher probability is that we're going to need some time. I doubt, I would be very surprised if we just blow through 6 and 7K without a fight. And I could be wrong. That could very well happen. And I have a plan if that does happen, but I'm weighing the probabilities higher on maybe a little bit of a longer term and a retest of the 4 to 5K zone. So that's my opinion. Rock, what do you think, brother? Do you have any other possibilities, probabilities?
Absolutely. Just want to add a little market sentiment component. I'm going to share in the chat interesting article. Let's say we are in the disbelief phase of the market. This article between the between all the April Fool's stuff, like news articles trying to stretch and find a reason why the price went up instead of just a technical reason or a supply and demand reason or user adoption, stuff like that. The April Fool's thing. But here's a really funny article by Gizmodo. I just posted in the chat. It says Bitcoin surges 15 overnight because nobody learned their lesson. And it basically goes on to say that Bitcoin's a lesson after the last crash. And so it says, oh, it broke a record high. And it says, to be clear, Bitcoin is absolutely worthless by any real measure. It's fake money that's about as practical to use as real world as monopoly bills. Bitcoin is backed by nothing or requires tremendous amounts of energy to mine, blah, blah, blah. So it's
nice. Wait, what site was that?
Gizmodo.com.
Oh, okay.
Right? Gizmodo. Right. So anyways, it's the saltiest. It is like the saltiest shit piece article that you could possibly write on Bitcoin's price action. And to me is just perfectly symbolic of disbelief as far as mainstream market sentiment is concerned. Right. Like that's essentially like what happens with disbelief is that, you get a rush of like believers, new users coming in at the highs. They all get crushed. Every hope of a recovery gets crushed as a dead cat bounce. Eventually, most people are shaken out. The few battle-hardened survivors who stick around tend to get pretty hardcore about it and also cynical, but in a good way. And then what ends up happening is that the mainstream media, we will fuel market sentiment and reflect market sentiment either by creating disbelief in people or by mirroring the disbelief that already exists. Because when people get battered down so much by a particular market, when it actually starts to show any early signs of recovery, generally it's met with a lot of saltiness and bitterness and so on and so forth, right? So to me, like a resentment, and then obviously that resentment grows if the market actually does turn bull and it keeps going higher and higher and then breaks an all-time high, then a resentment gets so strong that it becomes all-consuming, where they basically dedicate the rest of their lives to trolling Bitcoin publicly, like a Nouriel, right? There's a good example. In 2013, Nouriel Roubini, does everyone know that guy? He's like this economist or whatever. He was at the Senate hearing last year, basically saying trying to convince them to make Bitcoin illegal and calling it a big Ponzi and all that kind of stuff. Anyways, what's interesting about that is that in 2015, when Bitcoin crashed from $260 down to $50, he was all over Twitter laughing at everyone when Bitcoin is at $50. Literally, at the bottom, he was laughing at everyone. I told you so. This is a piece of garbage, blah, 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 blah. And then he's been obsessed with hating on it from $50 all the way up to $20K. And then after it dumped from 20K down to, down to current levels or whatever, he came up, he was very vocal on Twitter. I told you so. See, I told you, like back at $50, I told you so, right? So like market sentiment wise, I love it when I see news articles that are extremely salty and bitter and skeptical and hating on Bitcoin when the prices are really, really low. Yeah. Just like those really douchey articles of like, everyone's getting hilariously rich except you when Bitcoin's at 20K. Or here's how you buy Ripple when it was at $4 or whatever. So it's just like extreme. They're catering to market sentiment is really what they're doing. It's clickbait, right? They're catering to the greater crowd, and they're not catering to the crypto community market sentiment by writing an article like that, because whoever's still around in crypto is probably a long-term bull anyways, right? They're catering to like the greater mainstream market sentiment of probably what the greater mainstream society or generally feel or think about it when people just kind of look at news pieces or the price action like once every blue moon and they don't know much about it. They'll be like, oh yeah, that was a scam bubble that popped and everyone's wrecked. And then, the next bull wave kind of goes under the radar until it's too late generally. So I just kind of wanted to share that article because I thought it was hilarious.
No, Rocky, that's really valuable to understand, right? Is like, because a lot of people just don't know. They take the news for its face value, right? But like you said, I mean, a lot of news nowadays is not really news. It's not information. It's biased opinions that are pandering to whatever opinion people want to believe, right? So when prices are low, people want to believe that, oh yeah, that was a scam. Let's pat each other on the back, or console each other. When it's high, aha, everybody's getting hilariously rich. Like, let's celebrate and pop bottles, right? There's such a conformist attitude for news, and without getting political, I mean, you see this on the right, on the left, right? It's just like people just want to feel like they're right. And the challenge, the great lifetime challenge that you guys are going to have as traders or investors or even entrepreneurs is to be profitable. You have to be a contrarian, but you have to be right too, right? Like you can't just be a contrarian and be wrong. Like you can have contrarian views, but if you're wrong, you lose money, right? Yeah. So you have to be a contrarian, and you have to be a contrarian and right at the right time, right? Or at least place your bets at the right time.
Yeah, that's the tricky part sometimes, is like the precision of timing, right? Because there's so many variables that come into play on the precision of timing. And one huge variable is also patience, right? Patience, so on and so forth. So like one could actually have the right idea and the right timing-ish as a contrarian, but still not nail exact tops and bottoms, but still generally know where the larger trend is doing, type of thing. Kind of similar to like when Bitcoin was going parabolic, and we recognize that as the end of the bull trend. I'd closed out the last of my trading position from like I think it was like a 5K breakout or whatever. Feeling pretty, and there was a little dip before that too. Feeling pretty good or whatnot about the double, and it went up even higher, right? So I didn't nail the top. I mean, I sold some longer term stuff after the fact, but it just went up a lot higher than anticipated. So even with that, right, the timing, like the contrarian was right on that one. The timing was right-ish, right? As in recognizing that the trend was coming to an end and it's time to hedge. But, had I'd waited just, a few more weeks, I would have been able to, or what I should have done is kept a little bit more on the table on that position, right? Coulda, shoulda, whatever. It's always good to go back and reflect. And what's interesting about that is in a market report, I actually did nail the date right on the head with the CME futures, that would be the top. But the CBOE futures launching a week before that kind of threw me off a little bit from that game plan.
Yeah, that was a little strange, right? Because it was a new market and there was like different timing, but I think it was a lot of stuff that kind of came together, right? It was the futures. It was obviously just the parabolic price pattern. Yeah.
Yeah, it's a perfect storm for a lot of that. And so let's say in the flip side, let's say we do go into an accumulation or a reversal. People's entries on that, like if you go back to 2015 and you look back to accumulation, maybe there were some entries that were closer to the bottom on the 166 flash crash. I know there was that nice Bitcoin long from 180 or whatnot, that big bottom. Maybe somewhere in between. There could have been a lot of stuff happening in between that range. And that range was actually pretty close to 100% range. So like, let's say possibility 3 plays out and we retest 6K and then we drop and we retest 4,500 area and then we chop around, or maybe we even like retest all the way back down for like a double bottom or something to really shake people out, especially if it was like a fast drop or something like that. One last little V bottom or something like that, then that would actually be a very similar 100% price range from the bottom up to 6K.
Yeah, so like if we panic down either to do a double bottom around 3K or even lower in between kind of the start of the mega bull trend, right? In between like 12 and 1800.
Yeah. I was thinking like if we did have a current range and when we're at now, in my opinion, I think if it did flash crash, it would probably hold up prior support at the just above 3K and then probably have a fast bounce. Or the consolidation above 4,400. If we can consolidate between 4,400 and 6K, I think that the longer we could consolidate in that range, the more ferocity the breakout above 6K would be. Similar to like how we just had 3 months of consolidation in the current range and just popped with a 25% 1 hour candle, right? I think if we had a larger consolidation between the breakout point at 4,400 to 6K, that lasts and takes us like several months. The breakout, once you do pop 6K, would be, I think, would be fairly epic and start to build up a bit of momentum. In my opinion, in order for it to be a fully confirmed, like this is one thing I pointed out my update too, is that this green candle that we just popped is actually the first major swing higher high that we've had on that entire, pretty much like the entire bear trend, right? Every swing up.
I don't really see a compelling higher high since the top, like since like November 17.
Yeah, it was like all lower highs all the way through, big descending triangle, and then a flop. And so this is like the first time we took out an actual resistance range since the bull market of 2017, right?
Yeah.
We had that little tiny fake out or fake test on Bitfinex, that got a lot of us, I kind of got a little bit excited on that one as well, but that was a bit of a fake out there. And that got sold. That was basically like the inverse of a flash crash leading to a breakout. That was kind of like a fake out leading to a breakdown, right?
Mm-hmm. Which is very common in longer term bear markets.
Yeah.
Kind of like if we look back at like 2014, right? And by the way, guys, this is the number one question that I've been getting from you guys the past couple of weeks or months is this accumulation, right? Is this accumulation? And my answer is you don't know. Well, of course, any consolidation is accumulation because people are buying, right? That's why it's consolidating. But you don't know until after the market structure changes that that is the confirmed low. So what I mean by that is like during, and of course hindsight's 2020, it's easy to look at this and know what happened. But during this bear market, like we didn't know exactly where the low was. Like there were several points in 2014 where we had accumulation, right? And it wasn't until this point right here, it wasn't until late 2015 that we had confirmation that that was the low, right? So like I was accumulating in my cold storage throughout 2014 in some of these consolidation ranges. So think about what that means. If you're accumulating some on the downside, even if you are actively trading and, you know, shorting and buying dips, and so you have your long-term capital, you have your short-term capital, which we were doing both back here. But what does that mean for your long-term holds if you're accumulating and price hasn't bottomed yet? That means you are in a drawdown, right? So let's say like you accumulated some back here, and you accumulated some on this consolidation pattern, right? And then you accumulated some more here, right? That means you're down 50 or 60% here, another 50% from this, and then depending on where you buy, but I think you guys get the point. Like when you're accumulating for the long term, it is very, very, very common to be in a drawdown during a bear market, right? It is just a part of trading. And I've seen some twidiots, some people on Twitter that anytime, like say we get in a position and we're in a drawdown, they'll be like, haha, you're upside down on your trade. You're a scammer. Blah, blah. And I'm like, you guys don't understand the markets at all. Like you have to understand like accumulation. And it's the same with early stage investments. If you're accumulating a newer coin that just gets listed, probably 80 or 90% of the time, you're going to be in some sort of drawdown. And that's why I say, guys, like you have to have thick skin. You have to really have an understanding of risk management and position sizing to do this and not freak out when you're in a drawdown. Right.
You know, that's a good point to what you said about market sentiment. And it's like people are more concerned with clout chasing and trying to like nail the exact bottom and to have people praise them and accolades or whatever, than actually making serious money, right?
Yeah.
And here's the thing, is that it's exactly what you said. You know, when you like, unless you're going to nail an exact bottom on something, if you're trying to get a sizable position and a longer term investment, and you have the right idea and you have a very strong thesis and how it's going to be bullish in the years to come or whatnot, and going with the premise that no one knows where the exact bottom is going to be or whatnot, then accumulating as prices go lower still fits within the investment framework of buying low and selling high, right? And not just that, but you can still come out with a temporary drawdown and still make disgusting amounts of profit off of that. Really, the main determining factor in all of that, which kind of separates the wheat from the chaff as to whether or not you'll come out of it making tons of profit off of it versus not, from what I've experienced, is mental and emotional equanimity, right? Like, will you crack under the pressure? You know, will the fire get too hot where you just can't take it anymore, right? Or can you still stay the course and can you still stick to the plan and stay the course, right? And obviously only hindsight will teach us as to whether or not it paid off or not. And obviously one still has to manage risk through position sizing and not investing so much, you know, more than one can afford to lose, and using too much leverage and debt and whatever, right? All goes without saying. So we mentioned that a lot. But oftentimes it really does come down to managing emotions, really. You know, not only having like a solid investment thesis, but being able to stick with a longer term plan and just manage emotions through those bumpy periods, right? Sometimes you got to sweat a little bit before, you know, no pain, no gain. Sometimes you need to sweat a little bit before you see the results, right?
Yep. And talking about sweating a little bit, and I'm making some very broad like estimates here, but like think of Tim Draper, like when he bought the Silk Road coins back in 2014, I believe he bought about, and I could be off on this, but like just hear my see the forest through the trees here. He bought, I think, about 30,000 coins at about $600. So that was, call it an $18 million position at the time. He ended up with a 70% drawdown from, let's say he bought back here in the summer. So in 6 months or so, he had a $12 million-ish paper loss that had he been emotional and had he not been able to stick to his guns and his conviction, you know, at the height of the market, in 18 or 17, what year are we in? At the height of the market at 20K, had he not sold anything, and I don't know if he has, but that's a $600 million position, right? So that's why we talk about risk management so much, guys. And what that means is like trading position sizes and thinking about the downside. That way you don't capitulate, right? Because if you do, you're doing all this work for nothing. So I hope that really drives home the point, because, you know, again, when we are in and this is why, you know, we said this all during 2017, bull markets are freaking fantastic. They are so easy to trade. You buy dips, you buy breakouts. Everybody's a genius. Everybody's popping bottles, right? Everybody's your friend. Bear markets, things get a little nastier, but it's a part of trading, right? Bear markets are when you really test yourself. And, you know, it can be hard sometimes. And, you know, my biggest piece of advice is just don't do anything that's going to take you out of the game, right? So kind of bringing this full circle, you know, talking about now that we know kind of some of the possibilities, let's talk about some of our plans of how we would manage these going forward. All right. So talking about possibility number one of a pop and flop, right? So just imagine that price a couple of weeks or a couple of months from now is challenging the lows or lower off of a V top, right? What would that look like? Well, if we go back to 2014, you know, it could be something like this. So this is what a pop and flop trap would look like. So you get this kind of washout, and then 320s, and this was real life at the time. We were looking at this going, oh, okay, it looks like we have a lot of support at 320. Oh, here's a big green day, right? So like this green day right here, if we're looking at this as if it's the live market, we're going, oh, cool. Even lows, right? Higher high than this pivot high right here. Oh, that could be the shift, right? And then you get something like this. This is what I mean, guys. Like this is what potentially this pop and flop could look like, where you get this really big capitulation candle, right? Really big doji type price action. And the volume is even higher and you close lower. That's a warning sign going, okay, this could be a trap. Right? Because that's what some breakouts in bear markets turn out to be, right? Because look, at this point in time, you're still in a bear market. You have potential for a shift, but this could very easily turn around and slam you, right? Which it did. Now, it took several weeks for it to like roll over and break to a new low, but this is where the next pain point came in. It was like people wanted to believe that 300 was going to hold. And then there was this triple bottom. And then it actually set up for a 1, 2, 3, 4 breakdown, which I think was actually on this day was caused by a catalyst, if I'm not mistaken. And then that's where the true bottom came in. So we could
there was like a Bitstamp hack around that
what
time.
was it?
for that.
Yeah, it was Bitstamp, and was Shrem's thing earlier that year. I can't remember.
Shrem's thing happened, I think, in 2014. That was a big catalyst.
Was it? Maybe it was this one. I remember. So I was doing some like live trading, and we took a short when that news came out. Anyway, so that's what this could look like, right? Like imagine this scenario now, right? And then we'll fast forward, and then say that the market does something similar, where we get that spike, and then tomorrow or over the next couple of days, you get that big capitulation candle. And then we go for lower. And then, so imagine, guys, what would the market sentiment be at that point? So we've had a little bit of a reversal, right? Everybody gets all excited. And then some heavy selling comes in, obviously, because why? There's a ton of bag holders in this market right now. Maybe the market's not done capitulating. Maybe there's still more bag holders that need to get washed out. Because remember, the market's bottom when all the weak hands are out, right? Once everybody that's going to sell has sold, it's very hard for markets to keep going down unless there's just no buying demand, right? Which we know there's buying demand in Bitcoin, but let's say that happens. Let's say we pop, we flop, we go for a new low, and then there's a nasty capitulation of one of these two scenarios where we get either, some, depending on where the high is, right? It could be as much as a 40 or a 50% sell off, or as low as a 30% sell off to retest the low. Or let's say it's a major washout that gets us to this level, right? In between the 12 to 1800 zone, right? Which that would be even larger. That would be 60 to 70% washout, right? I would be prepared to buy either one of these scenarios with heavier volume if these scenarios played out in under 3 days, right? So under 1 to 3 trading day candles, where like say we again got some kind of like 2015 type price action where you get this. Right. So you have the hope that it's going to hold, it rolls over. And then over the course of 48 hours, 48 to 72 hours, you get, a 30 to 50% washout on heavy volume. That's often sign of a reversal point, right? Not these like little red days where there's like average volume. That's right here, guys. This is what we call a grind, right? You're just kind of grinding down. There's no big volume. Here, you get those 2 days on massive volume. Bam, that's the capitulation. And that's why we bought at 188. All right. So if something like that happened, I would actually, to be honest, I would prefer that, because in my mind, that would take out even more weak hands. And I would be more confident buying on a washout in a bear market than breakouts, right? So I only got like a quarter of my desired fill here filled, right? Because it happened so quick. So I would actually prefer another washout. That's just, yeah. What do you think, Rock? What would you prefer here?
I prefer to wake up. I prefer to market that goes sideways until 2020, and then first day of 2020 to break out of 20K to 100K, and then
in one day.
In one day, one massive candle, and then I'll just like mass wholesale all my bags, and then wait for and I'd like that neatly wrapped and packaged with a bow tie on it.
Nice. It'll be delivered. The markets will give you a heads up and say, hey, yeah. Rock, make sure you wake up on time tomorrow, buddy.
Yeah, I need the Bogdanov twins paging me. And
yeah. Cool. Okay, so let's just let's write these out then. So these are the possibilities. Now, with the plan, so this is my plans. So for scenario number 1 is I'm getting prepared to buy dips in the event of a 30% plus. And I feel like I've typed this same line so many times and we haven't gotten it this year. in less than 3 trading day candles, right? With that potentially being the low, right? But we don't have a confirmed low until market structure changes. Now, the second scenario, let's talk about this one. So in the event of the bull case where we get that fast shift, where do you guys think would be, I have 2 buy areas in mind for kind of the green line scenario, aka shift into a fast bull trend. Where would you guys buy if that played out? Goldie says above 6K. Pull back on a 1, 2, 3, 4 or above 6K breakout, pull back support. Early breaker retest. Yeah, I agree with all those. So for me, it would be the way that I would do this is if we got like a weaker pullback and say we turn, this 5,800 zone back into support and we get a bounce off of that, I would likely start to scale in a little bit there. But then the add would be on the break of resistance, right? Like something like that. And I would do my best to time that as close as possible. So, again, for number 2, it would be, scale in some on a weak pullback, then hammer the breakout above 6K area, right? Pretty simple. Again, I'm not telling you guys to do that. That's just my plan. You have to look at your capitalization and your risk tolerance, but that to me would be a clear sign of something like a spring 2013 play out, right? Number 3, so, and I believe, this is just my opinion. Again, I feel like the probabilities are maybe aiming here. I think the higher probabilities are kind of a mix between number 1 and number 3. So either the pop and flop with another washout, right, to kind of clear out some more weak hands and bag holders, or confirmed accumulation, right? So in this event of the yellow lines, I would slowly accumulate on a retest of 4K and or like a fast washout that was holding above the current low. Right.
Yeah,
so
we went up to like 6K and then had that washout to retest the lower 3s.
Yeah.
That would be an interesting dip if that happened in a 3-day span.
Yeah, absolutely. So let's see if I can move that. Okay, cool. So that's what I'm seeing right there, guys. Now, obviously, the caveat to this is anything can happen. Any black swan event could happen, both a bullish black swan or a bearish black swan, meaning an event that would happen that we can't predict with the information we have today, right? Could be a hack, could be some kind of mass adoption. But at the end of the day, guys, one thing I want to make kind of clear is there's no magic in this price action, and there's no like technical indicator we can use to predict with certainty what's going to happen. The best way to think about this, and again, we've been talking about this flow ever since we kicked this off in 2013, is look at the possibilities, look at the probabilities, create a plan, and then it's better to respond rather than try to predict what's going to happen, right? So come up with the ideas, and you can lean into 1 or 2 potentials, and you can say, I think this is what's going to happen. But at the end of the day, the most important thing is where you place your capital, right? Like everybody in the world had an opinion about crypto over the past couple of years, right? Anybody that heard about it was either bullish on it or calling it a scam. The only people that I respect that have an opinion are the ones that actually put their money where their mouth is, right? If you think Bitcoin's a scam and you think it's shit and you don't short it, shame on you. or if you believe it and you're not actively trying to accumulate it, same thing, right? Put your money where your beliefs are. But at the end of the day, like, yeah, exactly, Coin Diva, skin in the game, right? And I have a lot of friends that are entrepreneurs that just like to kind of troll and like poke at it. A lot of times those guys and ladies are the one that low tick the market, right? They're laughing as prices going down when really they should be doing the opposite. So,
yeah, the whole talk is cheap, right?
mhm,
It's like
exactly.
just give them a BitMEX referral link, and it'll be like a loaded gun. Go on, cowboy, pick up the gun, short it. I dare you. Short it.
Yeah.
I mean, because people could talk trash about Bitcoin, it's like what you said, but if they're not willing to short it, like if someone truly believes it's a scam and it's going to zero, and they don't short it, do they truly believe that? You know what
Yeah.
I mean? Why wouldn't they want to make money if their hypothesis has so much conviction? Why wouldn't they want to profit off of that?
I think most people just like to troll. They would
Yeah.
rather waste time trolling than actually doing something that's going to better themselves. That's why I've just become so disgusted with social media, and I've like deleted all the apps off my phones and barely pay attention to it anymore, because it's the signal to noise ratio has just gotten out of control. It's like 99.9% bullshit, and like very rarely is there something of value, right? So anyway, so talking about risk management, I saw a couple of questions where he says, can we discuss risk management specifically about protecting a fake out, right? So yeah, so here's how I'm playing this in the short term. So I got some fills. Let me zoom in here. So where was it that we bought? I think it was on the right shoulder here when this was forming to be a potential head and shoulders. Scaled some in the low fours. Been waiting. Got a little more here. So, and my risk to reward thing got erased somehow. But here's kind of how I'm looking at this. So this is the prior pivot low right here. Okay. So here's the prior pivot low around, call it like 3,900 or 4K. The first kind of structure area is here in the 5,500 area, right? Right now, this is what I call like open air. There's really no immediate price action or anything that's kind of showing that this is a top, right? So there's two things that would show me that would help me show that there's a top. It's either a big capitulation candle like I showed you from 2014, or a reversal pattern like a regular head and shoulders or a double top or something into this area, right? Now, of course, this could just fall apart without any of that, right? Like by the end of the day, I mean, this could come all the way back down and actually be a red candle. I think the odds of that are less than 5% if I were to put a number on it. So I do think there's more upside until there's a reason to believe otherwise. So the first zone would be here around, like, call it 5,600. However, if there is a shift and there is a change and we do get heavy selling on high volume, the area in which the market should not break would be this prior pivot low at the worst case, or even tighter is the prior zone. So sometimes what you'll do is you'll get a retest of the breakout area. So if we came back to like retest 4,400, I wouldn't be freaking out unless there was like massive systematic selling, right? Then you'd want to be like honed in on that and actively watching it. But, let's say we get over the next couple of days, like little continuation, a week pullback on low volume, and then it starts ramping up again, right? Or let's say, today we kind of close at the top end of this range. Tomorrow opens up, retests the close of the candle, continues up higher, right? We get up into 5,500 or 6K, right? I feel like that's got a higher probability, in my opinion. And so if that happens, because we are technically still in a bear market, I'm going to look to take profit on part of this position as a quote unquote trade, right? Meaning like a swing trade, somewhere in between 5,500 and 6K if we can get there, right? Because that's my first target. And my trading plan that I've designed for myself says that in a bear market, if you take a breakout trade in a bear market, take some profit into the first profit target, because we don't have confirmation that it's going to do anything beyond that, right? It could, we just don't know. So therefore, in the face of uncertainty, take something off the table. That's just my mindset. You might say, Chris, you're crazy. This is the low. I'm going to hold for 20K again. So be it, right? Or you might say, hey, I'm scared. The first red candle I see, I'm jumping out, right? I think that'd be a mistake, but to each their own.
Yeah, for sure. I think, in my opinion, in order to have like a fully confirmed trend reversal, so something like the first sign is accumulation, but to actually be in a quote unquote full bull trend with the higher lows and higher highs, in my opinion, what we need to do is take out that 6K resistance and then start to produce the higher lows.
Yeah.
At the instant we break out above that area, in my opinion, is when we can safely call it a bull trend again.
Yeah.
Well, safely, quote unquote. Obviously, no guarantees ever, but.
A pop. Where did I type that? I'm trying to make a chart for you guys so I can delete this text. All right, so I'll throw this into Discord real quick. One sec. Okay.
Because yeah, that's a very good point you make when you compare that to that 2014 fractal, where it kind of like it showed a higher low and then a first higher high on the pop, and then that was just like a fake out. So it's definitely something to be mindful of as a possibility. And generally if I take a trade, or if I have an investment thesis and I'm buying something for an investment, generally as I'm doing it, I often just ask myself, like, what's the worst case scenario? And then how would I respond to that? So I already mentally prepare myself ahead of time so that I can stay the course.
Yeah. Yeah, exactly.
Yeah.
So, saw a couple of questions here. How much would you take off? So I typically, and it depends on the trade, but on that first pop, I usually take in between 25 and 50%. In a bear market, probably closer to half. Here's my thought process on that, by the way, too. It's like, look, you're in a bear market. You don't know if this is the low. You get a bounce. Okay, you have a nice little bounce play. I just like to keep it simple. Like I round off everything. Like whenever I look at charts, whenever I think about my portfolio, I just, my brain doesn't do well with math. So I just use round numbers. So I'll say, okay, I want to close about half of this, right? I close half, I adjust my risk, right? Maybe I'll pull my stops, either a hard order stop or a mental stop, somewhere closer to break even. Or if I see a possibility where I can minimize or reduce the risk, I'll do that. And then I'll just see how far it can go on the second half, right? Or 3/4. That to me removes most of the guessing. It allows me to take profit, right? It really does three things. It allows me to take profit. It allows me to, in most cases, reduce or eliminate the risk, right? Meaning adjust the stop or at least make it smaller based on the continuation price action. And then number three, it leaves me open for more profit. So to me, that's the best of all worlds, right? You claim some money, you reduce the risk, and you leave yourself open to make more. I don't see a better win-win-win than that.
Yeah, and the thing is like, let's say you do sell 50% at that resistance, and then let's say it consolidates, and then let's say it breaks out above that resistance. There's nothing saying that you can't just add to your position again.
Yeah.
Right?
Yeah. By the way, guys, like I'm still nowhere near full size. Like here, why don't we do this real quick? A couple days ago, sorry, my voice is super scratchy today. Allergies are kicking my butt. So a few days ago, we in the crypto watch lists, we posted our our portfolio allocations, I'll just do a quick update on this. So I've been around 55% fiat. So, over 50. After the fills, I'm closer to 35%. Actually, I would say this is even lower, probably closer to 45%, because my XTZ and BAT have grown, right? As markets move, like you can initially get into like say a 5 or 10% position that if that trade goes crazy, if it has significant growth, that can turn into 20, 30, 40 or more percent of your portfolio. For me, I get nervous when something turns into more than 15 or 20%, but I'll just show you. I mean, this is round numbers, but I've accumulated a little more into Bitcoin. I've accumulated a little more into XTZ and BAT, and those have grown a little bit over the past few days. And I haven't bought any more T0, so the STO is similar to the same.
Nice.
How about you, Rock? Do you have anything you want to add to position sizes or portfolio allocate? And by the way, this is crypto capital only. Like this doesn't count capital I have for other markets.
Yeah, that's an important distinction too for everyone to know, is that you really have to figure out like what are you comfortable in a high risk market. You've got different types of risk levels depending on investment. You could have something that's a lot lower risk, like let's say making some passive returns off of something like real estate, for example, as long as you're not in a real estate bubble. Or, obviously there's like bonds and stuff like that, a little bit more, not as high reward, but not as high risk type of thing. So crypto is definitely considered very high risk to reward, in my opinion, as far as investments are concerned. It's high risk because the bloody thing could like lose 90+% of its value, and it's high reward because the bloody thing could go up 1,000x. Right?
Yeah, and you can actually quantify that by volatility. By the way, like risk is a derivative of volatility, right? That's why we talk about drawdown so much. And like, if you are ever in a drawdown in crypto, don't be surprised. It happens.
Yeah, for sure, absolutely. So for me, as far as just explain my portfolio allocation again. So pretty much I'd say the majority of 2018, I was sitting in fiat, and I did start adding, like building up positions and stuff around the 6K level. So basically things dropped, and my plan was if we did snap and drop into new levels, my plan is that I would go a little bit more aggressive. So I took a bit more of an aggressive approach on that. And that's not necessarily something, it's like one of those things where it's like, don't do this at home type of thing, or don't do this under the influence of alcohol or by an open flame type of thing, right? So like, even though, and I've been super conservative all 2018, and then on that final drop I got really aggressive. To me that was like a calculated move, and it was kind of still strategic. It was still within my plan. It was a very non-linear plan. It's not necessarily a traditional type of trade setup. So basically, like what I did was I started knife catching a bunch of Bitcoin. Then the interesting thing with me knife catching Bitcoin is that Bitcoin could also be used as dry powder for altcoins. So a lot of altcoin traders or crypto traders are so stuck in their ways of only trading the BTC charts that right from the get-go, Bitcoin is their dry powder. Like even up at the highs when Bitcoin is at 5 digits, that was their dry powder, right? So for me, I kind of bucked the trend on that and just concentrating more on fiat in the bear season. So then when we started to dump, I went harder buying Bitcoin and then that Bitcoin got flipped into altcoins. And the interesting thing is just, you know how a lot of people got wrecked on taxes by buying some cheap Bitcoin and then flipping it into alts at the high, creating a taxable event, and then bag holding those alts, not having money to pay the tax. Well, this is like kind of like the inverse of that strategy. Well, that wasn't a strategy. That's basically a plan on how to get wrecked. So this is like the inverse of that, which is basically I buy, the price goes low. I don't know where the bottom is necessarily, but I have a area of like, you know, this is starting to get fairly low. This is low enough. This is lower than anything we've seen in the bear trend type of thing. So I'll start buying Bitcoin. And then if I flip that Bitcoin, if that Bitcoin is down and in the red, and if I flip it into altcoins, knowing that everything is correlated and that on a bounce, everything would rise and alts would likely rise higher percentage, more aggressively and faster. By doing that flip, I'm harvesting a tax loss on the books. And it just so happened that that corresponded perfectly with the end of tax season for 2018. So that timing kind of worked out in my favor. So I flipped all that Bitcoin into altcoins. Rather than like going for the shotgun, I want to invest in, you know, 50 different types of shit coins and then, you know, flip it all on the bounce and blah, 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 blah. For this cycle, I decided that I wanted to go with something that I felt was a strong winner and just go a bit heavier. So, you know, doing some real heavy accumulation on a particular coin that I felt was, in my opinion, you know, I could be wrong and it could die, and so be it. But in my opinion, I felt had a very high probability of being a solid play, a solid winner. Then, you know, so basically I flipped a bunch of Bitcoin at the lows. I was also knife catching Tezos on the way down as well. And I had some ICO from 40 cents area. I got multiple fills down at the lows. I even sent a trade alert, I think in February at the between 30 to 40 cents. And I basically said I increased my position by about 40% at that time. In that particular junction or trade, there were some previous trades and buys prior to that as well. So I think the February buy was my last buy, if I'm not mistaken. And also
yeah, I think it was here on February 4th, somewhere right there.
Yeah, so that, yeah, exactly. So that was my my last major fill in that zone.
Yeah, I just found it. You said, since XTZ are my only bags, easily generating passive returns, I increased my investment position by about 40%.
Yeah.
So that was a low tick.
So I gave it a nice increase in my accumulation strategy. Dynamics have changed for me a little bit in this plan. You know, like I went into it and I had a plan, and then as a part of my plan, you know, Quadriga got hacked, and so that actually took a bite out of some of my fiat reserves that I had. I had fiat on some other exchanges still, and in the bank and such too, but that was actually dry powder that I had sitting on Quadriga since the trade I'd made in April, which was like the April bounce play, and I just kind of hedged that into cash, and I didn't touch it for the whole year. And so as a result of, as soon as the news broke out on Quadriga, in my mind, I just kind of wrote it off as a loss. I'd rather write it off as a loss and be pleasantly surprised than to, you know, hold on to the hope that I'm going to see that money again. So
and then you just have that loss in your mind day after day after day.
Yeah, for me, it's like you have to be like as brutal as certain scenarios can be in crypto, and as harsh as things can get, and as trying as things can get. In my mind, I've become really good at just casting off, you know, casting off losses or bad, like not letting it get to me, right? I've become and I think it's just something that comes with experience. Obviously, you still have to have the right mindset and the right mindset training for that, emotional intelligence. But I think it's also something that comes with experience in crypto, where you can learn to just kind of, you know, cast off, you know, bad situations and still keep your head up and make the best of the situation. And so basically, as soon as that news broke out, in my mind, I was like, all right, well, that's a loss. If I get some partial refund on that, then hallelujah. If not, so be it. I've moved on. So I had to adjust my strategy a little bit. So part of the adjusting of the strategy there was to basically pull off all my money off of the exchanges, the other exchanges, because once you take one hit from one exchange, you don't want to, suddenly it changes the risk exposure, risk reward dynamic. So I pulled off all the money off of the other exchanges I was on. A part of that was in fiat. So I did do a fiat withdrawal with some of the fiat reserves that I had on the other exchange into the bank. That can be deployed back into the market if I need to, just so I have some fiat. But a big chunk of that actually just got consolidated into Tezos. So that turned into my largest position as an adaptation. And then when Tezos popped and went up, suddenly when I did my calculations, I was like, oh crap, this actually grew into like 50% of my portfolio. And I'm not a crypto portfolio, I should specify. And I'm actually, I'm okay with that. I'm comfortable with that. And the strange thing is this is the largest altcoin investment or trade position that I've ever had as far as size is concerned. And I don't lose a wink of sleep at night or anything. Like I don't even sweat a bullet or anything, right? To me, it's like I went in a bit heavy on it, and I'm kind of swinging the bat for like a grand slam or kind of training for that one punch knockout. You know, and it might not work out. There's no guarantees, but in my opinion, like what I've done as far as like managing risk on this is that I created a position size that was big enough where that if it hits the price targets where I think it could hit, it'll bump me up into the next level where it'll literally impact and change the quality of my life again. So it had to be big enough for that, but not so big where if it completely dies, that I'm out of the game, that I'm bankrupt, that like it's not going to impact the quality of my life if it went to zero. It would suck, right? Like I used an analogy, like you're in a fight and maybe doing that, you end up like, you know, breaking a toe or something in the fight, but you're not out of the game. You can still go back into training. You still have another fight. It's not like you get your neck broken type of thing, right? So like big enough where it would be equivalent to breaking a foot, but not so big where I'm literally breaking a neck and being paralyzed in this battle, right? So that's just for me. Like that's just what I chose to do for myself.
Yep.
For a few reasons. One, I kind of needed to up my crypto dose a bit. You know, I did fairly well on the last market cycle, and in this market cycle means I could afford to take a bit more risk, but also to up my dose a bit onto a size that's interesting enough for me that if it pulls off something like an Ethereum that I've now like hit, you know, graduated into the next level as far as my own net worth and so on and so forth. I have one question. I just want to address this. If you accept going in heavy, why not take some profit in a bear market? The biggest, so there's basically 2 points I want to make to that for myself anyways. Number one, for myself, it's opportunity cost and not wanting to, it's too early in the game for me to want to create a taxable event. I don't feel like paying a tax bill on taking profit at $1. So that's number one. I'd rather wait and hodl. Like one common thing that I saw in the last market cycle is, you know, people selling too soon, way too soon. And you know, I saw some.
Rocky, we've never done that. Come on.
Yeah. There's definitely a few markets I've done that on. And, you know, I saw some people with examples, like one guy on Twitter, he's like, oh, I bought Ethereum at $1 and I sold it at $2 and I thought I was a genius. You know? Like I doubled my money, right?
Yeah.
So I would much rather go for like it's making me passive income right now. If these price levels hold up, even if it goes sideways at $1 for the next year, I'm actually making really decent passive returns as far as just the 7 to 8% I'm getting in Tezos. So that kind of like incentivizes me to hold longer. So I don't want to create I think it's going to go higher in this next cycle. I don't want to create a taxable event this early in the game. And number three is there's actually, there's still not a ton, like there's more volume and liquidity, but like I don't want to be that guy who like sells into $1 and then like it's just still not enough liquidity on the table for a graceful exit to take profit, any profit that would be meaningful for me to actually kind of quote unquote take risk off the table at this phase in the game. I'm actually as a part of this plan, I'm very, very comfortable in having this as a multi-year hold investment because I'm an early adopter. I think it's blockchain 3.0. And I really kind of want to see this thing grow and see where the ecosystem takes me. And if it doesn't work out, then so be it.
Yeah.
You know, it was worth swinging the bat. But that's kind of just where I'm at. Now, that's not to say that, you know, other people shouldn't take profit or whatever. Everyone's got to do what's right for them. I'm just saying that for myself, and I see the resistance points. I could try to get cute and play with the waves and Tezos and stuff, but I'm just I might take a little off the table at $5 if we get there, but 10 is really kind of like the 10-ish area. 9 to 10 is really kind of my first major price target, and we'll see if that plays out. So with this particular strategy, I'm just going for kind of like max efficiency, like making the most amount of money as passively as I can in this particular trade setup. So that's kind of where I'm at.
So Rocky, one thing that I really appreciate about that is how well thought out that plan is. So like, you know, you have a obviously a plan for time horizons, and you've fully accepted the risk, and you know what the potential reward is. We've actually calculated the market cap at those levels and what that would look like in the real world, right? Yeah. And that, so if we were to kind of go back and look at our capital buckets, right? We've really got just a handful of buckets, right? We've got cold storage, which is like, you know, coins you buy and you never touch them because you want them in the event that the world melts down or whatever, right? You have position trades, right? Which are like, you know, investments, sometimes like maybe a 2 to 3 year hold time, right? And then we have like our short-term trading. You know, this could be like day trading, it could be swing trading, but, you know, I'd say anywhere from like 2 days to 2 months on average, right? For the shorter term stuff.
Yeah.
And then what I call like long-term venture capital, right? Where you're looking at a 5+ year time horizon with a high probability of 100% loss, right? Because if you're investing early in a company or a project, and you know that 90% of companies go out of business within 5 years, and that of even smaller percent than 5% have some kind of liquidity event where they get bought out or they go public or something like that, you know, you're risking literally whatever check you're writing or whatever coins you're buying, right? Depending on if we're talking about a blockchain project or a traditional venture deal. So it sounds like to me what the bucket that you're putting this in is kind of that number 2, that kind of position trade time.
Exactly. Like I'm thinking of the greater macro trends, you know, where Bitcoin is at in its cycle, what that would do to altcoins. I think for Tezos to true, like the ecosystem needs to, we're already seeing very fast growth in the ecosystem. And I see all the similarities, and, you know, obviously other big players recognize this with Tezos, as we've seen with big news like Coinbase custody. And also another thing, Tezos was added to Binance's app wallet on their phone or whatever. So to me, that's like a precursor to getting listed on Binance. I think it's one of those projects that I think isn't going to have to really spend any money on marketing. They're focusing on the tech and the education component of it. And the more it grows, it's going to market itself. So for example, Coinbase listed on Coinbase custody as their first major investment product for institutions on that. And suddenly it breaks all over the news. You know, you've got Wall Street Journal talking about it, and it's like all this free advertising, right? So there's a huge difference to me, just in the quality, on a fundamental note, the quality of project. For a project like that, that represents, like a a blockchain 3.0 ecosystem versus some, small DApp cash grab where they got to pay Forbes like 10K for a media package so that they can have some sponsored articles and shit like that. To me, there's like just like such a huge difference in the quality of project. Like a solid project, basically, if it is solid, should speak for itself. The tech and the ecosystem growth will be newsworthy and remarkable enough that it doesn't need to drop its money on marketing dollars. Yeah. Just like Bitcoin never needed to spend a single cent on marketing dollars. It gets enough advertising just from all the periphery companies built into its ecosystem using it as a product or service that are doing advertising for it, right? Indirectly. Same with Ethereum. When Ethereum grew, it just really spoke for itself, right? It had the ICO boom. It's a big deal. It really, it spoke for itself, and the ecosystem growth. Basically, every single ICO that paid, hundreds of thousands of dollars on marketing in the marketing budget, or even millions of dollars in a marketing budget, all indirectly advertised Ethereum. They were advertising their project, but it was on Ethereum and you needed Ether to buy into their project. So they're advertising Ethereum. And that's one of the reasons why Ethereum did so well. So it's not like Vitalik went out and had like a massive friggin', PR campaign and started buying media packages for Ethereum. They just put their heads on, focused on the tech. They built something interesting. The ecosystem grew and then it spoke for itself. So that's kind of like what the possibility of what I'm gunning for seeing in this particular project. So.
Nice. So to add a little color, I'll give you kind of my contrasting view with that. So you guys know Rocky's plan. I'm doing kind of a two-prong approach. So I'm going to do something like this. So obviously looking for to do something similar, which is hold for a much longer term position if this develops into something that we think it could. But also, I like to trade the waves too. So I'll have like one account or one part of my capital allocated for position trades, and I'll have another piece of this allocated for short-term trading. So I don't necessarily mind the taxable event, and I have fun being more engaged and actively catching the swings. But like Rocky said, I agree with him in that we want to be patient if this develops into something bigger. And that's definitely something that I learned in the last bull market, was not underestimating how crazy things can get. Now, I'm not saying we're going to do another 2017, but I don't want to cap what is possible. Meaning, like there were times like when, for example, like when Ethereum, when we were trading the breakout at $1.50 and then, trading that up to $15, to me, my mind was blown. I was like, I can't believe Ethereum made it to 15 that did. Right. Yeah. And so there was a piece in between, I want to say it was like $50, whatever that run was. It was like 50 to 200 or 50 to 400. I really didn't catch much of that move because I let my opinions get in the way of that. And it wasn't until we had the breakout above 400 that I actually made a significant amount of money on Ethereum. I nailed the shit out of that breakout trade. I'm like patting myself on the back for that one because I nailed it and, managed it exactly how I wanted. But I learned a very valuable lesson, which is don't underestimate what markets can do, but also don't think that the markets are going to do what happened in recent history. Like the next market cycle is going to look completely different than what we've had before. It's going to be driven by different factors. The volatility is going to look different. The players are going to look different, right? Markets evolve over time. So, whenever we're looking at Bitcoin and we talk about some of the past, home runs that we've had in different markets, we use them as examples, but I don't want you guys to make the mistake of thinking that the future is going to look exactly like the past, right? That's why I like that common disclaimer you see on like financial websites is like past performance doesn't predict future results. And that applies to like the broad stock market,
individual stocks, bonds, crypto, gold, real estate, whatever, right? Because as time goes forward, the market participants and the capital allocation changes. So just keep that in mind. Now, I know we've been going for a little over an hour and a half. I want to just bang out a bunch of questions. I know we've had some of these piling up. So if the chat's been going kind of quick, if you posted a question in chat that we didn't get to yet, feel free to just repost it so we don't have to try to comb through the chat and find it, or just post it in the Q&A module. And we'll spend the next few minutes just knocking out some questions. The first one I want to start with is Rave. Says, Chris, couple of questions. Just talking about getting fills. I did see some questions this morning about limit orders and stuff like that. And the first thing I'll say, guys, is please do your homework and learn what orders are and become intimately familiar with whatever exchanges you're using and what order types they offer. That way you're not scrambling when a move happens. That way you're prepared ahead of time. So with that said, Rave says, from your alert, I assume you had stacked some stop limit buy orders. Did you also have them stacked on the downside in case of a breakdown? I did not. I don't like on shorts, and this again is just personal preference for me, but in the event of a breakdown, I like to manually enter. I feel like shorting is significantly more risky than going long, just because your risk is literally infinite and you're trading on margin and there's fees and just, pop stop runs, stuff like that can happen. So I will almost never set limit orders for a short position where if there's a breakout setting up, I'll feel comfortable in liquid markets like Bitcoin, only liquid markets, setting limit orders. You'll never see me set limit orders for low liquidity, very thinly traded altcoins. I just won't do it. The risk is too high. The second part of that question is how do you stack orders? How many orders, all at the same price or different levels? I'm not going to go into too much detail about scaling into trades because we could spend a couple of hours just doing examples. If you guys look at my XTZ fills from last week when I was buying in, you guys will see. Let me see if I can get this to open up. On Kraken, let me see. Kraken gives you these nice little green dots whenever you get a fill. So you can see, on the initial breakout, which I think, what was this? This was around the 50 cent level. I think this is actually clustered. I believe I got 5 different fills, but it shows 3 here. This is me manually getting in. And what I'll do is when I'm manually entering orders, I'll obviously look at the order book, right? Market depth and time in sales, and see what type of position size that market can handle. And it was either last week or the week before that, I did a little bit of a lesson on that. So if you guys want to go deep with that, just watch the last recording. But the thesis there and the idea is that you don't want to try to get a fill significantly larger than what the market can handle. So if you've got a close inside bid and ask of say $100,000 worth on the ask and $50,000 worth on the bid, and you're trying to get $1 million fill and you hit market order by $1 million, that market is going to spike like hell and you're going to get a ton of slippage. You might even clear out the whole order book. You might get one of those crazy BitMEX type spikes, right? But coming up here on these, I had different limit orders set. So I'd watch price and I'd say, okay, I want to get in around here. I would actually place a limit order and then walk away, right? That's if I'm traveling or at the gym or eating or trying to do business stuff during the day, right? And then there's the multi-day, overnight orders. So what I'll typically do is just set anywhere from 1 to 5 kind of staggered orders around an area. And I'll set them so they are what I believe the market could handle on a breakout. But here's the problem. If you're doing a stop limit order. Okay. So if you're saying fill me at, I'm just going to use a round number, fill me at 4,400 even or nothing at all. Right. And there's different ways you can finesse this, but I'm going to try to simplify it. If you're saying fill me at this price or nothing at all, and you make your order too big, you might only get a partial fill or you might not get filled at all. I saw some of you guys are saying you had limits on Bitfinex and maybe didn't get a fill. I only actually got about a quarter of the size filled that I actually wanted. So that can happen. And you just got to be okay with that. The market's going to give you what it can give you. Whereas if you do a stop market and you say like, fill me at whatever price, that's where you could get slippage. So if price is spiking really, really fast, so I think those are a little more risky on breakout trades. That's how I like to do limits and set like a range and say like, hey, fill me at this price or this range or not at all. That's safer so you don't get big slippage. And, we do a lot of examples of this in the boot camp where we, show you order flow and stuff like that. I mean, that is a skill in and of itself. But does that make sense, guys? Everybody clear on kind of like how to use limit orders and the risks and rewards between limits and markets?
That's a really good point that you made about the stop market orders. I made that mistake. I think it was 2015 or something like that. Anyways, price broke down. I was in a long on a dip. Price broke down below it. I had a stop market order, and it threw me in at the bottom, and then V-bottomed and bounced. So it was like right up past the breakdown point. So basically, it was just like a loss of money for nothing. It was just because of the slippage. It didn't actually execute at the breakdown point. It cascaded, I guess, because of a large market sell order, and then cascaded and closed me out at the bottom of the wick and bounced. Yeah. And at that point, I had to reevaluate the way I set stops.
Yeah. Fortunately, the exchanges are a lot more stable than they were a few years ago. For you guys that were with us, you remember like anytime there was volatility, it would be like, oh shit, Coinbase locked up again, Bitfinex locked up again, Kraken, you've never worked, right? Like that was kind of the attitude back in the day. But Kraken has gotten a lot better. Like they've come leagues from where they were back in the day. I haven't had a problem on Coinbase Pro in forever. I don't trade on Bitfinex anymore. I don't trade on most of the altcoin exchanges anymore, actually. But yeah, I mean, the infrastructure is kind of caught up with the demand, I feel like, which is great. But yeah, I mean, my baseline advice is just go intimately learn each exchange and each trading platform, because they offer different order types. Like some don't offer stop limits and some have good till canceled orders, and some are like, no, we're going to cancel your order at the end of every day. So go learn what order types, and even go in and play around with small size, like set up like a small demo account, but like use real money, but like a very small insignificant amount of money where you go, okay, this is my play money, and if I lose it, that's okay. This is like my market tuition in a way, where I'm like using this to learn how to use the exchange, and then go in there and get a sense for what it's like to place these orders. And okay, so when the market does this and it breaks through an area, okay, it's harder to get these types of fills, right? You got to really get interested in it and spend time practicing with it, because the worst thing that could happen is like you have no idea what you're doing. You fund your account, you've never placed an order before, and a setup comes along and you see everybody taking it and you're scrambling going, I don't know how to get into a position, right? Like you don't want that to happen.
Yeah, absolutely. There's one quick thing that I wanted to, I forgot to mention one quick thing I want to say for anyone in relation to tax situation, for anyone who's in the US. Because I know the US handles the capital gains taxes a bit differently with long and short term capital gains. If one separates chooses one coin specifically as an investment bucket, that would be longer term gains. So the rule is if you hold something for over a year, you get taxed at a lower rate. I think it's 25% or something like that. I think the top.
Yeah, Nikki's going to do a class on this for you guys, talking about capital gains and, different structures. But we don't.
And then shorter term stuff, like if I were in the States, I would pick some markets that I wouldn't be invested in that I would just trade shorter term. And then that would just be treated as regular income. One thing I want to point out for folks in the States. We had another question. A guy asked me if I'm baking and what I think about Coinbase's custodial service, if I'll ever use it. I am baking. Well, I'm not baking myself. I'm delegating towards some bakers right now. We do have a student in-house who runs TZ Envoy. You can see him on the mining chat. He's got his own little baking service that he set up, which is pretty cool. So we have a in-house baker. He's baking some cakes. And what else was I gonna say? So Coinbase. I like what Coinbase is offering. I think it's good for financial institutions that need to hedge their downside risk of theft or hacks through the insurance. That's one of the biggest elements to the service that they're offering, is the fact that they're underwriting it with insurance plan, which is unheard of in crypto in the event of theft or hacks. So they're tailoring to a particular niche market that need to manage that downside risk. You can't be a financial manager, planner of people's portfolio, and then all the coins are gone. It's gone, right? So for a lot of people, they weren't really into that risk. So that this could allow them to get into that. For myself, it's not for me personally, predominantly because I'm kind of old school in the sense that I want to hold my own private keys. So I would much rather have them in my own hardware wallet, because technically, if Coinbase is holding your funds, then they could, be confiscated, or they can.
Rocky, what's wrong? You don't trust exchanges?
Yeah.
You have no reason to be skeptical of exchanges. Come on, bud.
They can do no harm. So I'm glad they have that service, but it's not for me. I'd rather keep it in my hardware wallet.
Well said, man. Oh, Stefan, hey, I'd be curious to hear about your experience. Yeah, so Puerto Rico is an interesting tax haven right now for U.S. citizens, where there's a couple of ways that you can set up structures if you live there where you basically pay little to no taxes. Stefan, if you don't mind, man, hit me up in Discord. I'd be interested to hear about your experience. I actually lived in Puerto Rico in 2012 for like 6 months, and it was cool. But I obviously I live back in the States now, but I haven't been back since then. So I'm curious to hear how things have changed.
Yeah, that would be cool to hear about, because I keep hearing about Puerto Rico. But is it that you don't pay any income tax at all, or what? That sounds like kind of like.
I think it's like no personal income and then 4% corporate or something like that. I could be off.
Even for federal stuff, like that's pretty wild.
Yeah. There's two acts. Yeah, 20 and 22. I've looked into it, and I haven't been motivated to actually do that yet. But I mean, every time I do the calculations, I'm like, my God. So anyway, let's wrap up these questions. Brainy asks, are you guys looking at any specific indicator at the moment, like stochastics or RSI? Or is it playing probability game, waiting for the markets to prove? So when it comes to swing trading, or 99% of what I do nowadays, I don't really use any other indicators other than dynamic trend lines and price areas and Fibonacci tools and volume. You can use moving averages. You can use oscillators like stochastics, RSI, Bollinger Bands, all that stuff if you want. I've just over time, when I was day trading several years ago, like I used to use about a half a dozen indicators, and I was super precise. the longer the time frame you trade, I think the less you need. And for me, I just pay attention to the most important thing, which is price, volume, and then market structure areas. And then I also like Fibonacci extensions and retracements to kind of add confirmation to these areas. The biggest problem with indicators is they can add conflicting views on things. And I would just kind of as a general suggestion say less is more. Rock, anything you want to add to that?
Yeah, nope. I pretty much agree with that. Usually you look at like the stochastic RSI sometimes on the 1 week, sometimes I'll never trade off of that. Like if you look at it on the 1 week right now, I think it's throttled up high, showing that it's overbought. But it was showing that prior to the breakouts. So, you know, in that instance, it's not necessarily like a buy or sell signal or anything like that alone. I've noticed that the stochastic RSI on the 1 week tends to, in Bitcoin anyways, just in Bitcoin, tends to have the cleanest signals versus like lower time frame that has a lot of noise. But you have to, like, to me, it's like you're making a cake, and maybe that's like the cherry on top. You can have the cake without even putting a cherry or sprinkles on it. So I don't think, you know, and if you only have the cherry or sprinkles, then it's not a cake at all. So you can't necessarily bake a cake with just a cherry, right? So to me, it's just like, it's literally like sprinkles on a cake. It's not necessarily something that I would just trade off of. Sometimes if the market's parabolic in a particular altcoin or whatever, or if we're like capitulating hard and we've got like violent extreme moves on the upside or downside, I will look for, you know, bullish or bearish divergences. One interesting thing that I've noticed with the RSI in the last alt season in 2017, summer 2017, and even when Bitcoin went parabolic, is that anytime alts would go parabolic and they pop a new high and then break a second high after going parabolic, like sometimes there'll be a massive sell-off and they'll push up, maybe even on lower volume and break a new high. A lot of times, many of those topped out showed divergences, bearish divergence on the RSI. I mean, there's also just common sense of like, look how parabolic that candle is. That one D candle dwarfed the entire bloody trend, that multi-year trend, right? There's just like, you know, just common sense, because you're in uncharted territory too when you're in parabolic territory. Just common sense of like, if you're up an insane amount of profit, take some off the table. But also one can support that thesis a bit by looking at those divergences. But it's not really something that I look at that often. It doesn't occupy a ton of my mental space or my trading or investing plan. It's one of those things where if I see a whole bunch of other things lining up, other conditions such as price action, volume, you know, market sentiment, so on and so forth, I might just take a look at it just to see if it supports, you know, if it supports what I'm seeing in the price action.
Yeah. Well said. I saw a couple questions about volume. So DT and Travis mentioned like how closely were we paying attention to volume? And DT says it's been the biggest pain point even during the drop from 6K. Hence his price action is not so reliable as prior price cycle. Yeah, I mean, so here's the deal. Anytime you get a break of a strong resistance level like this, you're going to see an increase in volume. The biggest question that I have right now is, okay, what do the next like 1 to 3 days look like? Like if we just drop back down to like the average volume that we've seen down here, that's going to show me that there might not be an immediate sign of follow through, meaning continuation to the upside. It might just kind of stagnate. And I agree. I mean, trading volume, A, has been down because we're in a bear market. B, is getting harder to really rely on in general because there's so much fake volume on these shitty exchanges. And that's why, like, I don't put too much weight on it unless it's at an inflection point, right? So, like, let's say, like, this
pop did this, but like it was barely showing any volume, like that would be a problem, right? So it's more of a confirming indicator or a leading indicator if you're building volume into a breakout area. Or the actually my favorite way to use volume is on capitulations, like on washouts. But even that isn't 100% reliable. So it's just like anything else. It adds confirmation, but it's not like if you see X, it means Y all the time, right? Let's see. Derek says, if an entry looks better in the BTC versus USD chart, should we look at? So I tend to put more focus on USD charts, but it depends on what Bitcoin is doing. So if we sort by, and so to recap, the question is, I believe, should we be putting more focus on the altcoin BTC chart or the altcoin USD chart? On a day like today, where Bitcoin is up big, you know, if we sort by percentage gain or loss here, you can see that most of the biggest losses are on altcoin BTC charts, right? So like on XTZ, so like Tezos, you can see on the BTC chart, this is down pretty big because Bitcoin went up so much, where on the USD value of your position is green, right? So like this is up 2.5%, where the BTC is down like 8 or 9%, right? Because Bitcoin went up so much. So what I tend to do, and I made a mistake with, what was it, BAT, and I was putting, I didn't even really look at the BTC chart. I was just overly focused here on the USD and just kind of noticed this price pattern. But if you look at how that correlated with the BTC chart, I love whenever you have an inflection point on both. So kind of as a broad answer to that question of, you know, should you look at the altcoin BTC chart or the altcoin USD chart or whatever fiat pair you're looking at? The answer is both. And it's particularly good if you have an inflection point on both charts. But I will typically lean more on the fiat chart just because that's how I calculate my holdings. I don't calculate how many Satoshis worth of an altcoin I have. I calculate the USD value of that altcoin position, if that makes sense.
Yeah, for sure.
How do you do it? Do you do anything different than that?
Yeah, I agree with you that it's important to look at both. So it's very like multi-dimensional. So in my opinion, a winning crypto trade is a combination of both the USD and the BTC chart. It's going up. In the current instance where we have a sell-off on the BTC charts, usually what'll happen with altcoins, and depends on where you're at in the Bitcoin cycle and in the greater meta trend, but usually what'll happen is if Bitcoin breaks out, makes a big move, altcoins tend to have a knee-jerk reaction and start dumping on the BTC charts. But if Bitcoin remains bullish, usually what ends up happening is that as soon as it starts to consolidate before its next move, when it cools down a bit, it's usually in those pauses and consolidation where you'll have a seesaw effect where the altcoins will start to gain on the BTC charts. But the difference is that they'll break new highs on the USD predominantly because they're gaining on the BTC chart and the price of Bitcoin is higher. So it's like sometimes it'll have the seesaw effect where Bitcoin will make a big move, they'll knee-jerk reaction down, Bitcoin chills, they push up, they make new BTC and USD highs. And so really, it really depends. So pretty much for all of 2016, altcoins were doing that seesaw effect. In 2017, something interesting happened where when Bitcoin broke the all-time high, alts had a knee-jerk reaction on the BTC charts where they sold off a bit. And then all of a sudden, everything started to move up together. Bitcoin would go high, and altcoins would go up even higher than Bitcoin percentage-wise because they're gaining on both the USD and BTC chart. Then once altcoins went parabolic on the BTC charts, which was profit-taking time, when Bitcoin dumped, everything dumped together. And then when the reset was set at 2000, at the $1,800 level on that dip, and Bitcoin got past its soft fork and it blew past a lot of the FUD and stuff, at that point, Bitcoin started to gain and dominate over all the markets. And they just, for about 6-7 months, they continuously bled on the BTC charts against Bitcoin. While Bitcoin had its moment of sunshine, it had to have its moment and on its spotlight on it, right? And they were going up in USD, but they were losing against Bitcoin. So at that time, the right play was to be heavier on the Bitcoin side. But here's the thing, in the current market cycle, that happened because altcoins went parabolic on the BTC charts. They had already gained over Bitcoin, and it was alt season. It was the time for altcoins to shine. Then Bitcoin had said, hey, I'm the final act. Get off the stage. It's my turn now. Take a back seat. Now it's my performance. So then Bitcoin took over. But the thing is, with the current market conditions, because in my opinion, according to my hypothesis, because the altcoin markets have already been battered into dust, into a pulp over this bear trend, because a lot of alts have only recently broke out of the lower accumulation ranges on the BTC and altcoin charts, and just recently broke out of that and made some gains. In my opinion, I believe that if Bitcoin does continue to go bull, that we'll still see a strong alt season, because oftentimes large players in the crypto space use flipping altcoins as a means to accumulate their Bitcoin before Bitcoin's final act, before Bitcoin does its bigger move. So like, we're not at a 2017 point in the market. That, in my opinion, could take some years. But prior to that leg up, to that new phase in 2017, that new phase of the bull market, we had probably one of the craziest alt seasons in history before Bitcoin went nuts and before Bitcoin's. So basically, alt season is usually the opening act for Bitcoin. Long story short, that's the best way I can describe it. So in my opinion, at these lows in the market, even though they could bleed out against Bitcoin, and obviously that could certainly be a possibility, in my opinion, I think we'll see more of a seesaw effect. We'll see. Time will tell.
Yeah, and this is, I guess, a little bit of a different way to kind of visualize it is capital flows really three ways in crypto. You know, it's a little bit different than like a stock, right? Because if you're just trading like the stock market, it's like, what is the value of your stock compared to like the US dollar or the euro or whatever, right? In crypto, we're dealing with three asset classes. You're looking at Bitcoin, altcoins, and dollars, right? And capital will flow different ways at different times. Sometimes Bitcoin and altcoins will be up, right? Because you have capital flowing both into Bitcoin and Ethereum, right? Like, it's kind of like in the bull market when all tides are rising. And then you'll have some time periods where Bitcoin will be up, but like capital is flowing out of altcoins. Like in 2016, I believe, yeah, like the first half of 2016, if you go back and compare, there was like this inverse relationship between Ethereum and Bitcoin. So like Bitcoin would like go up, you'd have capital that would flow into Bitcoin because people were selling Ethereum, or vice versa, right? So you'll have, you know, like Ethereum that would go up, and then sometimes they would move together. And then sometimes you'll have, you know, Bitcoin that is down because people are buying some other altcoin, right? So there are several different ways that this capital can flow, and it's important to like really think about that and say like, what's happening in general, right? Like right now,
I would say capital is not flowing into everything like it was in 2017. It's not all tides are rising. I think there's capital flowing into Bitcoin, and I think there's capital flowing into certain altcoins. But I think 90% of altcoins over the next year, we're going to start to see even more lows as a lot of those projects die. And then what'll happen is in bear markets, you'll get this where it's like you'll have capital that comes out of Bitcoin and alts when everybody's panicking and goes back into fiat, right? So it's interesting to think about the different ways that money gets shuffled around. And that's ultimately what drives the price, right? Is people. So we talk about like these scenarios of bull markets and bear markets and possible outcomes. But at the end of the day, it's like what people do with their capital and where they put it that actually matters. And so I would just like encourage you, whenever you're thinking about this, when you wake up and like you look at your watch list or you check in with the markets, say, what does it look like the capital is doing today? Right? It's a slightly different way to think about it. Basically what you're saying is like, what are the charts doing? But think about the people behind the decisions and think like, what are people doing and why? And that might just add a little bit of clarity.
Yeah, definitely. Absolutely. We had another question, or someone asked me, why are other coins gaining today and Tezos isn't gaining today? The simplest answer to that question, in my opinion, is that basically Tezos was the star of the show last week, right?
Yeah.
A lot of coins were a little bit stale. Some coins did pop off a little bit. We saw some action on bad, some other things. But Tezos was really, the big gainer last week. So the thing is that oftentimes things have to hit periods of counterforce, right? So if everything was like so-so last week and Tezos was the star of the show, then it makes sense for this week for there to be some counterforce on that, where other things have gone up today and Tezos is a little bit sluggish. Just like when Tezos was in that lower accumulation range, other things were kind of popping off and a little bit hotter, and Tezos was underperforming. It wasn't really doing anything. That to me would be like the simplest explanation as far as the market dynamics are concerned. When I talk about momentum, counterforce, and inertia, it had a lot of momentum last week. It hit some counterforce, and now we've got a pause. We've got a pause in that particular market. It doesn't necessarily mean it's over for it or anything like that. It just means that it's operating at the moment. It seems to be operating on a slightly different time clock than some of the other markets.
Yeah, and this is something that you'll see pretty common in markets that are trending, is like, we talk a lot about Fibonacci pullback zones and the sweet spot. Like let's say that on Monday, you'll see a coin that has like 100% gain, right? So say it doubles on Monday, and you come over here to the gainers list and say it's like number one and it's up 100% on $10 million in volume, right? So that's Monday. Then Tuesday, you wake up and it's down 50% because that's a 50% pullback, right? And then this is why you'll see coins a lot of times go from the top of the gainers list to the top of the losers list, right? It'll be here showing red, down 50%, and you're going, oh crap, why is it down so much? Oh, that's terrible. Well, really, it's all about the context of the price pattern and the market structure, right? If it's down 50%, that could be just a normal part of a trend, right? That could be healthy. And then Wednesday, say it's up another 100%. Like, so that's very common to happen. And if you look at the price structure here, that's exactly, or not exactly, but that's close to what we saw, where you had 3 days of big gains, right? Let's just look at percentage range. So it was up about 75% over 3 days. And then over the next few days, it had a pullback of 20 to 25%, right? And then it did something like that. It did another 75% push.
And then here on the pullback, at least on the USD chart, it was down another 20%. So that is, in my opinion, a very healthy price structure. But a lot of people, they just look at the numbers on a website and they have no context of the price chart. And that's why they get confused or thrown off. So what happens on any single crypto on any random day is completely irrelevant. It's what's happening in context to the bigger picture that actually matters.
Yeah, and an interesting thing with Tezos is the volume actually has increased today. We're pushing close to 10 mil now in volume overall. And Kraken, if you look at the volume on CoinMarketCap, is actually top market now for Tezos.
Oh, no kidding. Oh, yeah, look at that. It's got legit volume.
So that's a different shift that wasn't there last week, even when it was super bullish, right? Yeah. Is there's more volume being pushed now in Kraken. And an interesting thing with those retracements or those throwbacks in a bull trend is, typically if they get scooped up quickly, or they get scooped up and there's like a small period of consolidation and then they move up, they tend to show us the strength of the buyers, the buying demand, right? Based on, how sluggish is the market on those retrace. Sometimes you have a market that pops off and then kind of just slowly fades away into like a full retrace, right? And then kind of grinds and does a whole lot of nothing. So that shows that, maybe there was a little hype event and then it fizzled off and there wasn't enough follow through or buying pressure. Sometimes you get like a big spike up and then a spike all the way down. That's usually just like, one whale who's, happy, got a little happy on the order book, a little impatient or whatnot. But on a true bull trending market, there should be a lot of follow through. So you'll see, it'll come up into a resistance point, it'll have a pullback, but it usually doesn't linger for too long, maybe a week tops or a few days. And the next thing you know, you've got another green candle, another breakout. There's a lot of follow through. So that shows that the dips are being bought up quickly with size generally.
Yeah. Well said. So a couple questions about Ethereum and then we should probably wrap it up. I know we've been going for over 2 hours. So nice ascending wedge here. Unlike Bitcoin, Ethereum has not snapped the multi-month resistance yet. So this is one that I'll be watching over the next 12 to 72 hours. See if we get some kind of squeeze and pop. Ethereum. Oh, sorry guys. I know I'm doing all kind of weird voice noises today. I'm losing my voice. Ethereum is one of these markets that I'm a little weird with limit orders. We've seen flash crashes. We've seen big spikes. It's probably more stable nowadays. I don't know. What do you think, Rock?
It's definitely because it has a lot more volume and liquidity. It's definitely a lot more stable. Like it's very much kind of like seems like it behaves similarly to Bitcoin, where it just takes a lot longer now for the moves to make big moves, because it's a much bigger ship to steer, right?
Yeah.
And I think that Ethereum, like generally when it's Ethereum's time to pop, it usually does, similar to what Bitcoin does. It'll go on a nice tear. But in my opinion, I think, one of the reasons why I chose, to me, a sweet spot as far as market cap is concerned. Like, I think Ethereum is definitely a good market to trade, and there's certainly money to be made there. But I think there is like an opportunity cost as far as like accumulation or investing is concerned, just based on percentage scale and market cap. Because, for like Ethereum to, what are the odds of Ethereum popping like 100x or 1000x from the current price point, right? I mean, for it to go 10x, basically takes it slightly above its current all-time highs. If you give it 100x, Now suddenly Ethereum just popped what Bitcoin did on this last cycle, except with a hell of a lot more supply. So that market cap would take it to like astronomical levels. And then you got to think of the practicality as far as like macro global economics and how much money is in circulation. Like there's going to come a point of market saturation. I don't think Ethereum's at market saturation at all, but I don't think it's going to be the biggest gainer percentage wise in this next season. I think that the time to be like a heavy Ethereum investor was in 2015 and 16. I think it'll definitely do well on this next cycle, but I think there's room for some competitors and there's room for some growth in some slightly lower cap, not low cap markets, but markets with a smaller market cap. For me, that sweet spot is like, you know, the mid zone where like the project's big enough where it's not such dead market that it's going to fizzle into nothing, like a completely illiquid small cap.
Yeah.
I personally it's just not my style. I don't have time for that to go dumpster diving the small caps. Some people do very well on that, and that's their bread and butter, and each to their own. There's many different ways to cut this cake and make profit in the market. But I've kind of been gunning for like newish projects that are like, you know, slightly higher mid cap that have growth to possibly be in the top 5, in my opinion.
Yeah, I agree with you. And just kind of doing some quick TA on Ethereum here. One thing that I do like about a bull case here is that Ethereum was down 95% as it should have been because it raised, you know, the ICO boom. That's all I got to say. Anyway, zooming in more immediate on this ascending wedge, if we can snap above the 165 zone, kind of the first area that I see here, which is also a measured move from the low to the resistance area here, is kind of the 250 zone, which is also a nice round number. So just based on some quick TA, looking at this lower or this immediate pivot low here, it looks like you could risk about 20 to make 50. So about a 2-to-1 to that first level. And then if it did something where it did have a much larger price pattern, kind of the next major zone is 400. So that's kind of nice there. But the risk here is in trying to anticipate the resistance level, like it definitely could trap. So I'm going to watch this one. I'm going to keep this on watch today and throughout the next couple of days. And then see if we can get some follow through it. You know, I hate just buying after like big random spikes. So like say like on the hourly, if we can get something like this where it like comes up into resistance and then does an even more clear 1, 2, 3, 4 pattern, like I would like to buy on something like that.
Yeah, for sure. And you know, because it's liquid and it's got volume, I think for trades, it can produce really nice, clean trade setups. You know, you don't have to worry about liquidity issues and stuff with it.
Exactly. Yeah, I'm probably not going to set limits like I do with Bitcoin. I don't know. That may be a mistake, but I'm just weary.
Yeah, you gotta stick with your territory, right? You gotta stick with what works best for you.
Yeah.
So not all markets should be tackled the same way necessarily. One could apply different tools or strategies to different markets and market conditions.
Absolutely. All right, Rock, what do you think? Want to go ahead and wrap up the recording?
Yeah, let's do this. So thanks for coming, folks. This random flash lesson, flash update.
Yeah, I know we went quite a bit of time today, but you know, we like to do this whenever there's something important happening in the markets. And I know some of you guys said you really like doing the weekly classes now. Some of you would prefer daily, but you know, again, everything we do is for what we think is going to best serve the community. And you know, when we're in consolidation and when we feel like we see people starting to overtrade, it just makes sense to pack more into less time, right? Just like, you know, our philosophy of trade less, profit more. It's like, spend less time in class, and the time that you do spend, you get the most bang for that time. And then going forward, you know, we'll see how these markets develop, and just keep hammering them. So hope you guys got a lot of value out of this. Thanks for coming.
Yeah, folks. So we'll see you all on Thursday. Take care.